G'day legends! Welcome back to Gold Jumper. Imagine the entire global energy market was about to go up in flames at 8 p.m. Eastern Time. Then, out of nowhere, a massive ceasefire drops and sends the price of oil into a total freefall. We are breaking down the shock truce, the oil price collapse, and what it means for your gold. We will check the Aussie dollar rally and see if the S&P 500 is losing its crown. Plus, we are looking at the technical charts and the latest gossip from the legends at WallStreetBets. Before we jump in, remember I am not your financial advisor, so keep your wits about you and trade safe. So traders, the big question is, do you reckon this ceasefire is the real deal or just a fake out? Tell me your thoughts below, smash the like button, and subscribe to join the Gold Jumper crew. Jump up and under, let's get into it, because the last 3 days have been absolutely mental. The legends over at WallStreetBets are frothing at the mouth, calling this a massive bear trap. Word on the street is that Gulf state funds have been dumping gold to cover their bills. Some of these Redditors are saying this is distress pricing and the ultimate time to buy the dip. They reckon the US dollar is in for a world of hurt once the peace trade really kicks in. There is a lot of talk about a day of reckoning for the greenback as debt keeps piling up. But for us traders, it is all about finding where the smart money is hiding in this chaos. Let's look at the chaos starting on April 6th, when everyone was sweating the big war deadline. President Trump set a hard limit for April 7th that had the whole world holding its breath. He warned that a whole civilization could die if that vital oil shortcut wasn't opened up. Oil prices were charging higher, with West Texas Intermediate hitting $113. Everyone was piling into gold as a safe haven, expecting the worst to happen at any moment. But then, some legends from Pakistan and Egypt stepped in to try and broker a last-minute deal. The tension was thick enough to cut with a knife as we approached that Tuesday night deadline. On April 7th, the news finally broke that a 2-week ceasefire had been signed by everyone. It was like a giant weight was lifted off the market, and the reaction was bloody instantaneous. West Texas Intermediate crude took a massive dive, falling 14.3% in a flash. It ended up landing near $96 and 83 cents a barrel, which is a huge drop. The Oil Volatility Index, or the OVX, shot up to nearly 99 as traders scrambled. That index hasn't seen levels like this in years, showing just how rattled the energy market is. While oil was crashing, the big stock markets in the US were pulling a massive U-turn. The S&P 500 erased a 1.2% loss to end up nearly flat for the day. But our local Aussie market, the ASX 200, is the real star of the show. It surged an eye-popping 2.6% to reach 8,946 points. That is the highest close in weeks, led by our big mining and tech companies making a quid. The S&P 500 only managed a tiny gain of 0.1% by comparison. It seems like the Aussie legends are much more excited about the peace deal than the Yanks are. Now, let's check in on the shiny stuff, because gold has been doing some serious jumping. On April 8th, gold was trading right around $4,709. Earlier in the session, it actually spiked up toward $4,850. That was the highest level we have seen in 3 weeks as the US dollar started to crumble. The US dollar index fell to a 4-week low of 98.90 after the truce news. But gold couldn't hold those big gains as investors started taking profits and moving to stocks. By the end of the day, it pulled back to settle just above that 4,700 mark. It is a bit of a sell the news event for gold after the huge run-up we had during the war. But don't go thinking the bull run is over just yet, because the long-term story is still golden. The Aussie dollar has also been catching a massive bid against the struggling US greenback. It pushed up to 0.7077, looking stronger than a Mallee bull. Higher Aussie yields are helping out, with our 10-year bonds pushing toward 5%. This is putting a bit of pressure on the local property market, but it's great for the currency. It is a classic risk-on environment where everyone wants the Aussie dollar and the ASX. Back to the oil patch. That 14% drop in one day is fair dinkum legendary. The reopening of the Strait of Hormuz means 21 million barrels can flow freely again. That is 20% of the world's supply back on the menu, which is a massive relief. But the OVX index at 99 tells us the energy market isn't fully convinced yet. Any little hiccup in the ceasefire could send oil right back into the triple digits. This is why gold is staying relatively high, even though the immediate war threat has faded. Investors are still nervous that this 2-week truce might just be a bit of a temporary breather. If the fighting starts again, you can bet your bottom dollar gold will be back at all-time highs. For now, gold is consolidating and looking for its next big excuse to jump higher. We are seeing a lot of buy the dip activity whenever we get close to the key support levels. The sentiment on Reddit is still very bullish, with legends holding on for dear life. They are looking at the massive US debt of $1 trillion in just 5 months. That kind of spending is exactly why people keep a bit of gold in the pouch for safety. Even with the ceasefire, the underlying economic problems haven't gone anywhere, mate. We are still dealing with sticky inflation and the Fed being very cautious about cutting rates. The US dollar might have dipped, but it is still holding firm near 99.10. This keeps gold in a bit of a range-bound battle for the time being, while we wait for more data. Speaking of the US, their job market is still looking pretty strong, with 178,000 new roles. This is making the higher for longer interest rate story stick around like a bad smell. Gold usually hates high rates, but the geopolitical fear has been overriding that lately. It is a unique market where bad news for the economy can sometimes be good news for gold. Our Aussie legends are navigating this by rotating into tech stocks like NextDC and Zip. Zip was up more than 12% on Wednesday, which is a ripper of a result. Even the big miners like BHP and Rio Tinto are joining the party, gaining nearly 3%. It is a great time to be an Aussie investor if you have been positioned for this rebound. But you have to keep an eye on the technicals to make sure you aren't catching a falling knife. Let's break down the chart signals for gold to see where the bounces are standing. On the daily chart, gold is still in a solid uptrend that started back in middle of March. We are currently hugging the 21-day simple moving average at $4,672. This level has been acting like a trampoline for the price every time it takes a tumble. Our RSI is sitting right in the middle at 49.5, so it's not overbought yet. This means there is plenty of room for gold to move higher before things get too heated. The Bollinger Bands are starting to squeeze tight, which usually means a big move is coming. On the 1-hour chart, we are seeing some resistance near $4,750. The 9-period moving average is acting like a bit of a ceiling for the short-term traders. If we can break above 4,800, the door opens for a run to 5,000. But if we lose the floor at 4,650, we might see a deeper correction. Some analysts are even eyeing 4,375 if the truce holds long term. But with the world being as unpredictable as it is, many are happy to buy every single dip. The OVX being so high means we should expect more choppy price action in the days ahead. Don't go chasing the green candles, just wait for the pullbacks to build your position. The Aussie dollar against the US greenback is another one to watch for a breakout move. If it clears 0.71, it could be clear skies all the way for our local currency. This would be a bit of a double-edged sword for Aussie gold prices in our local currency. But for the global market, a weaker US dollar is usually fuel for a gold rally. We are seeing a bit of a rotation out of the Magnificent 7 tech stocks in America. Those big names like Apple and Nvidia have been struggling a bit compared to the broader market. Investors are looking for better value elsewhere, and gold is definitely on that list. It is all about protecting your wealth while the big players sort out their geopolitical mess. The 2-week ceasefire is a good start, but there are still plenty of risks on the horizon. Localized airstrikes are still being reported, so the truce is looking a bit fragile, to be honest. This keeps the peace premium from fully disappearing out of the gold price just yet. Traders are staying nimble and not getting too comfortable with the current calm. The next few days will be critical to see if gold can solidify a floor above 4,700. If it does, we could be looking at a very exciting finish to the month of April. Remember that gold has gained over 53% in the last year, which is legendary. A bit of a sideways move here is actually quite healthy for the long-term bull market. It lets the overbought indicators reset before the next big jump toward the moon. So keep your eyes on the charts and your ears to the ground for any breaking news. The ASX 200 is showing us that risk appetite is definitely coming back to the table. But gold is the ultimate insurance policy that you never want to be caught without. To wrap up the technicals, the relative strength index is neutral at 49.5. Our 21-day moving average is the key floor at $4,672. Bollinger Bands are tightening up for a big volatility expansion in the very near future. The 9-period moving average on the hourly chart is the immediate hurdle for the bulls. To wrap it all up, we just saw oil take a massive dive after that 2-week ceasefire was inked. Gold is holding its ground around $4,700 after a wild ride to the highs. The Aussie dollar is looking fit and healthy, gaining ground while the US dollar index takes a breather. Our ASX 200 has been the star of the show, outperforming the S&P 500 by a mile. WallStreetBets is shouting to buy the dip, seeing this as a golden opportunity for the long haul. Volatility is still high with the oil VIX near 99, so keep your eyes peeled for any news. Technical signals show a bit of a consolidation phase, but the underlying bull trend is still very much alive. Now traders, back to that big question. Do you reckon this peace deal will hold, or are we heading back to war? Chuck your thoughts in the comments below. I love hearing what you legends have to say about it. If you enjoyed the update, smash that like button and subscribe to the Gold Jumper channel for more. Don't sweat the dip, just more room in the pouch. Stay active, stay legendary. Catch ya.